In this video, we'll be discussing the phases of the EMA strategy in a downtrend. In a downtrend, the phases of the EMA strategy are exhaustion extension, wedge drop, EMA crossback, basin break, and reversal extension. Extension exhaustion. Here at the top of our extended move from a most recent intermediate uptrend, the characteristics of an exhaustion extension are separated EMAs, thinning doji candles, and reversal indications. Let's take a look at this phase a little further on our 30-minute time frame S&P 500 E-mini futures chart. We know that we are currently in an uptrend above the 8 and 20 EMA, and we're looking for our entry to the downside in this phase. Remember from our unit on EMA crossovers that we're looking for the price to meet a significant resistance and fail to make higher highs. The EMAs will move from extended to close, price action will fall below the EMAs themselves, and then the EMAs will cross. Let's see how this looks on a chart. As we can see, price is failing to make higher highs, and the extended EMAs begin to squeeze. We see that the selling pressure from one side has decreased, and it is visualized in the form of a small doji candle. Unlike a thick selling candle, a doji shows a weakening of pressure and lets the trader know that the extension exhaustion has begun to form, and they can start to look for their entry at the beginning of this downtrending EMA strategy phase. The next phase is the wedge drop. The characteristics of this phase are an upward facing bear flag or wedge that breaks into a cross of the EMAs. Now that we have identified the extension exhaustion, the next phase that we are looking for is called the wedge drop. The characteristics of this phase are a bear flag chart pattern back into the EMA lines, where we can confirm that the EMA lines are now acting as resistance overhead. Additional confirmation is given when the EMA lines cross one another. Let's see on our chart how this plays out so we can identify the wedge, bear flag, and the EMA cross simultaneously. As price action is unfolding, the trader can use the boundaries of the EMA lines as resistance overhead and plan to see if his prediction of price action plays out accordingly to the EMAs acting as resistance overhead while filling into the bear flag pattern. As we can see, when the EMAs cross and the pattern is broken and retested as confirmation, the trader is pleased that this phase has conducted as expected and begins to move further downwards. The next phase is the EMA crossback, in which case the price action or candles cross back over the EMAs and move back down. In the EMA crossback phase, the price action will make an attempt to move back above the 8 and 20 EMA and ultimately fail. Depending on when the trader entered the trade, they will still be comfortably in profit to watch this phase play out. As we see price action make an attempt to cross the EMAs and go back to the highs set by the extension exhaustion, we ultimately see the 8 and 20 EMA hold as resistance and push the price further down. We then have the basin break, where period highs and lows are established as the EMAs flatten out. In the basin break phase, we take note of the significant support and resistances as the EMAs themselves move from downtrending to flattening. It is at these points where the price action will determine whether it is strong enough to move higher and break the downtrend, or push lower and continue selling to lower prices. Let's see on our chart how this plays out. Using the EMAs as our guide, we see here that price has met a significant resistance. The wicks on the bottom candles are also showing us that there may be some support below. As the EMAs flatten and battle over price, the trader that entered in an early phase is safe to hold and watch this play out. As we could see, using the EMAs as our guide to set our support and resistance, even when the price made a push back above the EMAs, the upper bound of our basin break acted as resistance and ultimately pushed the price lower. Using these phases, the trader that entered the strategy early is able to watch and confirm each of these phases conduct without fear of losing their position or profit. Finally, once the base is broken, we move down for our final move into the reversal extension.